Thank you, Justin, for that introduction, and good day to all of you in the audience, wherever you are. My name is Seth Hertlein, and I'm Head of Policy and Government Relations here at SDF. We've got a fantastic series of debates queued up for you today with some of the top minds from within the Stellar ecosystem and beyond. I'm honored to kick things off with a comparative discussion about the range of regulatory approaches to blockchain and cryptocurrency around our world. Blockchain regulation, like anything else, is not one size fits all. Different countries have different customs and philosophies, which lead to different regulatory priorities and outcomes. And this is as it should be. Blockchain technology is new enough and revolutionary enough that policymakers pretty much everywhere are still trying to figure it out. What works, what doesn't, how to harness it for good, and even whether it represents a threat. The varying ways policymakers answer these questions necessarily results in experimentation, some good, some less so. My esteemed panel today will each represent the viewpoint and experience of a different country that has been active this year on blockchain policy. We'll explore 6 topics, each through the lens of your nation's approach, seeking to identify what led to good results and what didn't. After briefly setting out each topic, I'll choose one of you to start the debate. When time expires, we'll need to move on to the next topic. So let's start off with a quick round of introductions. Please take a minute to introduce yourself, the country perspective you are representing on the panel today, and the 1 or 2 most impactful blockchain policy developments in your country this year. Oleksandr, is it all right if I call you Alex?
Yeah, that's perfectly great.
Great. Okay, let's start with you.
So Alex Bornyakov. I work for Ministry of Digital Transformation of Ukraine, and generally I'm in charge of development and growth of IT industry in this country, but this includes a policy making around virtual assets. So we decided to take a broader approach and not just regulate blockchain or some crypto, but we wanted to create an environment for all the type of assets, and we call this virtual assets, which includes of course, crypto and gaming, virtual assets, and many more. So far, we almost finished with the regulation, with legislation, and I'm happy to be here and talk about and elaborate on details. Thank you.
Great. Thank you very much. Professor David West, may I call you Yinka?
Yes, please, Professor.
Yes.
Thank you. Hello, everyone. My name is Yinka David West. I'm the Associate Dean and Professor of Information Systems at Lagos Business School in Nigeria. So Nigeria, as you know, is Africa's most populous nation and is one of the largest countries or users of Bitcoin. Nonetheless, the Bitcoin and cryptocurrencies are prohibited in Nigeria, and we have different regulators. We have an IT regulator, we have a banking regulator, as well as a capital markets regulator, that are all intersecting around the Bitcoin regulation. So I look forward to having this debate and this conversation with colleagues from around the world. Thank you.
Kristin?
Yeah, thanks, Seth. Hi, my name is Kristen Smith. I'm the Executive Director of the Blockchain Association. We are a trade association for the cryptocurrency industry based here in Washington, D.C. So we are focused on lobbying U.S. Congress, U.S. federal agencies to try to get good policy. We've had a lot of developments this year, but I think sort of the biggest thing is that these were issues that were once considered sort of a niche issue that a small group of people worked on. But what we saw over the summer is that there was a negative provision that was put into a piece of legislation working its way through the US Congress. And it really sort of galvanized the community and made them realize that Washington is a place that they need to pay attention to. And even though we weren't successful in changing this negative provision, it really woke both the community, the crypto community, up to Washington, and Washington is now aware that there is a vibrant crypto community here in the United States. So I think going forward, we're in a position to have a much better conversation with government, regardless of the different policy issues. So excited to be here today and excited to be part of the extended Stellar ecosystem.
Erik, round us out.
All right. Hi, I'm Erik Bethel. I am a senior fellow at the Chamber of Digital Commerce in Washington. And previously, I was the U.S. Director representing the United States on the board of the World Bank, where I helped promote a number of initiatives, among them helping to tokenize World Bank loans and blockchain enable them, which I can touch on later. I grew up in Latin America and have spent pretty much all of my career in and around the Latin America region. My topic is going to cover El Salvador, where, as you may have heard, they've adopted Bitcoin, and looking forward to a very robust discussion with this august body of panelists. So thank you for having me.
All right. Well, let's jump right into it. Our first topic today, you all know the story of Goldilocks and the Three Bears. So using the Goldilocks scale, too hot, too cold, just right. Describe your country's policy response to blockchain. 5-minute discussion. Kristin, I'm sure you have a few things to say about this. Why don't you get us started?
I mean, I would say, unfortunately, it's a little bit too cold. I think we're not far away from just right. I think that, if you look at securities laws, anti-money laundering policy, tax policy, stablecoin policy, there has been a lot of discussion and debate. There has been some guidance. And if you look at the anti-money laundering side, I think that guidance is actually pretty good and stable. On the stablecoin front, I think there's some ideas out there, but no real clear direction. Our biggest concern right now is securities laws, but I think that there is a structure in place, there is regulation in place, and what we need to do is clear up the outstanding issues around definitions, particularly with securities. But I think right now, the longer we wait to let this space develop, I think the better off the policy is going to be, because it's moving very quickly. It's taking a long time for policymaker understanding to catch up to the technology. And what we don't want is some sort of knee-jerk reaction that goes too far or stifles innovation here in the U.S. and pushes it overseas and elsewhere. So I want to say it's just right, but we're not quite there yet. I think it's a little bit too cold.
All right. Well, if the U.S. is a little too cold, Erik, why don't you tell us about El Salvador? Maybe there's a different take there.
I hate to say too cold or too hot, because any extreme requires a measurement somewhere in the middle, like you're indexing off what, like what does actually too cold or too hot mean? But I guess it's a matter of perspective. The comment I would make is, as we speak, El Salvador is promoting Bitcoin Week. There are a couple of events taking place, and there's a lot of interest and activity. One is the most prominent event is Latin Bitcoin Conference, and then Adopting Bitcoin is the second. I'm looking through my various headlines here on El Salvador. And the first that comes to mind is the Minister of Economy of El Salvador saying, "We are proud to have adopted Bitcoin." The second headline is, El Salvador accepts Bitcoin at Starbucks, McDonald's, and everywhere else. The third is the president of El Salvador announced that there are more people using Bitcoin wallets in El Salvador than bank accounts. So there's a lot of activity taking place in El Salvador. Now, to be clear, let's understand what El Salvador did. It just basically legalized the use of Bitcoin, and establishments accept Bitcoin in addition to dollars. Everything is still priced in dollars. In other words, the unit of account is still US dollars, but Bitcoin can also be used. So to summarize, a lot of activity, a lot of interest in El Salvador. People are using it, and I guess the jury's out as to how this will play out.
Alex, last word on this to you. I know Ukraine has been very forward, leaning into to virtual assets. Tell us a little bit.
Yeah. Well, if you speak about blockchain, so we think that we are trying to keep like a technology agnostic approach. So I would say this from this scale, we're like too cold. But in general, like a virtual assets, this is the priority, but set by president, by the government. And of course, this is one of the priorities of the ministry where I work. And I think that's too, I can describe it as hot, maybe not too hot, but we certainly put a name ahead of ourselves that we need to make a crypto-friendly country. So everything is related to blockchain technologies, to the crypto, to the virtual assets is a priority for us. And a parliament, this is just maybe just a small hint, but the parliament voted for the law with 267 votes. It's almost 2/3 of the parliament. So even deputy parliament members support that. So that would be my answer. I didn't want to leave some time for anyone else.
Yeah, so maybe just right. So I think that's actually a great segue into our next topic. Alex, we'll stick with you, and Yinka, I want to get your take on this too. But there's often a tension between regulatory agencies and legislatures on the question of who between them should lead on crypto policymaking. On one hand, regulators are often said to be more technically proficient, but on the other hand, legislators tend to be more accountable to the people. So I want to get your takes on who's been leading on blockchain policy in your jurisdiction, and do you think that's the right result? So Alex, since it seems like Ukraine might be getting things right, at least on terms of our Goldilocks scale, why don't you take this one first?
Well, thank you. Well, we started, this actually started like almost 3 years ago. For the long time, like almost a year, the leading role was for the parliament, for basically the legislation part of the government, and regulators just didn't pay attention for any changes that was offered by parliament members. But after ministry was formed, and and I came and other people came, so we started to take this seriously and work with legislators. So I would say that this was joint effort of the parliament group. We actually have a parliament in the parliament. We have a separate group of 50 parliament members that called Blockchain for Ukraine. So this is the really like crazy thing, that parliament members, legislature part, united from different fractions, with different political views, but they united to get blockchain and crypto and virtual assets as a priority. Right now, I think that, well, just to conclude, I think we work together. I wouldn't say that we have different views. So in Ukraine, it's kind of aligned. So legislation part and regulator, we have a similar and actually have a same vision and very similar approach.
It's super interesting to hear that perspective. Yinka, tell us what did the Central Bank of Nigeria do this year, and what was the legislature and the president's response to that?
Well, generally, I think we don't have as savvy legislators in this part of the world as they do in Ukraine. So we don't have any substantive legislation yet. But the central bank, as far as 2017, actually restricted banks or prohibited banks under their licensing guidelines from doing any crypto transactions, and basically citing the safety of crypto and things like that. But again, crypto trading still continued, and they still went further to now to extend that prohibition to the accounts of the customer holders. So right now we have this ban on crypto trading, but there's still P2P transactions going on. The IT regulator, on the other hand, has actually introduced an exposure draft of a blockchain strategy, and just basically trying to educate people on what blockchain can do and the different applications of blockchain. But as you know, crypto is one of the more nuanced applications that's more popular. And again, so that's what people hone their ideas onto. In terms of, so the central bank is really leading, the Securities and Exchange Commission is looking at tokenized assets and just looking at the whole digital assets range. But I think the legislators in these markets will lead, because the regulators, legislation will take too long. And what they'll do is that they'll couch the regulation under some frame within financial stability or something or the other that gives them the ability. And then don't forget that in this time, legislation also takes a long time. It might take 4 or 5 years before you get any substantive legislation passed through the legislators before it goes to the executive for ratification. So I would go for regulators. Thank you.
This is sounding very familiar to me from a U.S. perspective. Kristin, what say you?
Well, yeah, listen, I think in the US, regulators have been on the front lines, right? They have existing rules and regulations and laws that they are in charge of enforcing, and they have the ability to interpret those when something new comes along. And we've seen that with our Treasury Department and our Financial Crimes Enforcement Network. We've sort of seen it with our securities regulator. We've seen it with the IRS, and there's been multiple times where guidance has come out. I think, though, in an ideal world, we would really have the US Congress be involved, because this really is a fundamentally different way of conducting economic activity than we've seen in the past. And regulators in the US, most of our regulation hinges on having a centralized intermediary who can, be accountable, who can do reporting, who can provide information, to government agencies. And with these crypto networks, there is no one central authority. And I think that really requires someone to step back, get outside of the narrow missions, because here in the US, we have a lot of regulators and they'll have very narrow missions. We need Congress to come in and look across the top, figure out what are our goals for the ecosystem, what are the different priorities, and where is the best place for that regulation to happen. Unfortunately, Congress is very busy, and this is a very complicated topic, so it's going to take us some time to reduce that knowledge gap. But I do think there's an increasing interest, and there's a lot of new people who are coming in to work in this space on the advocacy side. And so I'm optimistic that we'll get there, but I think we're several years off before having Congress come in a thoughtful way that actually, gets enacted into law.
Erik, I've read some the headlines in the U.S. about the adoption of Bitcoin in El Salvador. I'm not sure that paints a full picture. What's been the sort of the interaction between the president in El Salvador and the legislature on this topic?
And the legislature of the country?
Yes.
I think it's been, the legislature approved the president's Bitcoin plan. The president of El Salvador has somewhere between an 80 and 90% approval rating, and which is unusual in Latin America. And his political party controls Congress as well. So I don't think the legislature has been an obstacle whatsoever.
Is there sort of a regulatory apparatus there that's having a say, or how's the rollout of this been?
Well, the rollout's been a bit choppy, let's say, as one would expect. This is a brand new method of payment. It's a brand new technology. There's a whole lot of new things going on, and so it's been choppy, but it's getting better. So the government has created something called the Chivo, C-H-I-V-O, Chivo wallet, and that rollout was a little slow, but it has since caught on. And now there are hundreds of thousands of people using it. So the regulator, if you will, is the Reserve Bank, because El Salvador is a dollarized economy, right? It's not even a dollar peg. They use the physical US dollar. So there's no central bank per se. They just have a Reserve Bank. And the Reserve Bank has been leading the effort on creating the Bitcoin dollar funds, which I can touch on later.
All right. Well, we're coming down to the wire on this one. So let's zoom out a little bit from the national to the multinational. International standard-setting bodies have become increasingly vocal and opinionated about blockchain. They've certainly had a lot to say about El Salvador. Some have argued that these bodies are unelected, they're unaccountable, they infringe on the sovereignty of member states and non-member states alike. Others contend that they're necessary for cross-border cooperation. So who's right, and what role, if any, should international organizations have with respect to crypto? Erik, let's stick with you. I know you've got a point of view on this one. Get us started.
When you say international bodies, are you referring to the IMF and World Bank and so forth, the Bank of International Settlements?
Yeah, sure. All those, FATF, OECD, the alphabet soup.
Yeah, look, well, let's begin with the IMF and the World Bank. First of all, let's understand that El Salvador is a member of these organizations, as well as the Inter-American Development Bank, and the list goes on. So countries are all members. After El Salvador launched the Bitcoin law, the World Bank made some very aggressive statements, saying that they'd have to rethink future loans to El Salvador in light of the climate change issues. The World Bank and the IMF are very heavily climate focused, and the perception is that El Salvador is going to add to climate change by using Bitcoin. El Salvador responds by saying, we're using geothermal resources, which are very clean. So if we mine Bitcoin in El Salvador, it's a clean resource. So these things are going back and forth, these discussions. The IMF and El Salvador have to negotiate Article 4 of the IMF agreement, which concerns obligations regarding exchange arrangements. But El Salvador's perspective is this: we're a sovereign country, and if we want to do this, it should be our right. The United States is a very valid perspective, which is, well, you're using the US dollar, and what if you have an on-ramp into something illicit? So there are a lot of points of view. These things are working themselves out, and I think over time, cooler heads will prevail.
Yinka, I'd love to get your take on this as well.
Well, generally, I think we all have to work together, because the international flows that we need to manage and the illicit flows that Erik just mentioned are a global problem. And as you know, financial systems are so interconnected today. So I think we all have to work together, again, giving each other a little room. And when the heads cool off, it's just like we just launched an e-Naira. And one of the things the IMF has come out to say is that, well, it could hamper or damage or limit financial system stability. So it's just about getting in the room together and ensuring that we're all working together, using the right indicators and collecting the right information and data and making the right decisions. Thank you.
Kristin, what's your take on the role of internationals from a U.S. perspective?
Yeah, I think from a U.S. perspective, the U.S. is sort of used to setting policy and having the rest of the world follow, right? It's sort of we like to lead here. I think what's frustrating from the advocacy perspective is, yes, certainly we want to have coordination and discussion with different jurisdictions and have some alignment. I think where we've found some shortcomings in this process, though, is there isn't a clear avenue to help to educate and influence in that process. Whether it be the FSB or the FATF or the OECD or others, there are often working groups and discussions, but from where we sit in the US, it's difficult to get in front of the decision makers, to give them our thoughts and ideas. And there's often comment periods and whatnot, but unlike the US, where you sit across from the table from a person or a Zoom call and have discussions and go back and forth, it's a much more formal process. And so, I would like to see something where I think, again, the coordination is important, but the recommendations that these organizations make often end up being the foundation for what gets enacted here in the United States. And so we would like to see a more open process, a process for expert input, so that these recommendations that these groups put forward are something that are actually workable and actually achieve the goals that the individual organizations have set out to do.
Great. Alex, as our lone panelist that is actually in a national government, curious to hear if you have a point of view on this.
Yeah, thank you. So I want to express my thoughts on financial assets task force. So cryptocurrency are cross-jurisdictional, and such regulatory changes do not stop on the national borders. So I think that would be a mistake to consider FATFs against the cryptocurrency, even though they do, like, they act as a global watchdog that has actually taken a good first step with model anti-money laundering rules, and that like around 50 countries already implemented them, including us. The FATF position in this states where when shaping their legislation for crypto should be guided by the principle it's better to allow and define the framework rather than prohibit. Because when crypto assets are legalized, regulators around the world would be able to respond and monitor and guide cryptocurrency activities in their jurisdictions, ensuring, among other things, the application and enforcement of tax rules and consumer protection within the parameters of assets' unique properties, while nurturing the growth of a lucrative crypto-based economy. So,
Alex, we're gonna stick with you.
Yeah,
sorry, I've got to jump in for a time. We're gonna stick with you, but I got to move on to the next topic. I want to take a look now at the relationships between governments and the private sector. And so there's been a mutual distrust between certain governments, some, not all, and the blockchain community. But in my view, my experience, the optimal policy outcomes are often the product of public-private partnerships. And I want to explore how open each of your governments have been to private sector participation. So I'm going to leave you with a statement to react to. Here it is. Without genuine collaboration with blockchain experts from the private sector, governments will never get crypto policy right. So Alex, I know the ministry just concluded its Foresight project. What was that all about?
Well, this is actually first time in Ukrainian legislative history when we gathered so many stakeholders around one specific topic. There was also Blockchain Association of Ukraine, kind of similar that Kristin runs, and many others. There were even cyber police of Ukraine. There were banks, there were central banks representatives. So we started to think like visionaries, like how we see Ukraine in 10 years if we're going to allow crypto and the rest. So this was a perfect example when we define the obstacles, the problems, and actually there was a lot of argument during those few days that we talked about this. So, but right now we do realize who are allies, what kind of their forecast or what kind of the future we want, and what kind of a future scenarios we do not want. And this is really amazing. By the way, the whole virtual assets law and legislation was not done solely by regulators or legislation part. There is a separate group of people from the industry that were helping, and they were given like human resources, their experience, just to give us a sense of like real world, how this really works and if we do this regulation, how it affects. So I'm really proud of the work we did, and I totally recommend just to listen to everybody that it comes from real business, because the main purpose of the government is to make the business grow and people happy. So that would be all.
Alex, you're bearing out my Goldilocks theory that Ukraine has sort of gotten this just right. But Erik, how involved has the private sector been in the government's efforts in El Salvador?
I think the private sector has been very involved. On my trips to El Salvador, I've been on delegations with a whole raft of people from the United States, from Silicon Valley, from the crypto community writ large, ranging from mining, Bitcoin mining firms, very large publicly traded ones, to know your client software companies. I guess the question becomes, not just in El Salvador, but around the world, the question of capacity within the host country. And so that really becomes one of the bigger challenges. To your other point about how governments should be working with the private sector, it seems to me a no-brainer, right? I think it's foolish for governments to ban Bitcoin, for example, or cryptocurrencies outright. A smarter approach is to work within a sandbox, perhaps at the central bank or the Ministry of Finance or wherever, where you've got lots of participants, right? So how do we connect to the country's real-time gross settlement system? Is there an automated clearinghouse? What are the national payment rails? What are the fintechs doing? What are the commercial banks doing? And so looking at this thing holistically within a sandbox environment is probably the smartest thing to do. And the smartest people probably around doing that are the Singaporeans. So I got to give a lot of credit to Singapore for doing things really well.
Interesting. Yinka, I see lots of head nodding.
Yes, definitely. I think the thing we have to recognize is the regulator or legislative capacity doesn't exist in the global south. So how do we start to build that? And this is where private sector also plays a big role. So in Nigeria, for example, the Blockchain User Association has started building capacity of the central bankers, of also the Securities and Exchange Commission, because that's where it all starts from. And I think the fear of technology in general, what you don't know, you prohibit. And so we have to start opening the minds. Otherwise, we're just going to continue going down the same rabbit hole. So I definitely believe that private sector will play a role, because this has to be collaborative. We don't know. And I think, again, if we focus on social and developmental outcomes and look at problems we can solve using the technology, and then we're on the same page, and then we can work through regulators, create the enabling environment for private sector to build out this solution and solve global problems. Thank you.
So Kristin, on this one, I think, in the US, you can probably find examples on both sides, right? Where government has been very collaborative with the private sector on blockchain, and examples where it's been very, sort of combative. And maybe that's just a good reminder that, governments are not monoliths, right? And so you can find examples of cooperation and maybe some contention. What's your view? What's your experience in this, Ben?
Yeah, well, we absolutely will not get good policy if the industry and the private sector and the ecosystem at large don't have a seat at the table. This is a space that is moving incredibly fast. It is incredibly complex. And if you are, either a congressional staffer or a member of Congress, or you are a sort of career regulator or an elected an appointed regulator, you just simply cannot know what's happening on the industry if you're not part of it every day. And so I think the for the most part, people in government want to learn and want to understand, but that requires having an infrastructure in place to meet that demand, because it's not a monolith. There are a lot of people involved and a lot of educating that needs to be done. And we can have all the wonderful policy ideas and solutions. If our audience in government doesn't understand those solutions, they're never going to move forward. And so I think education is a huge piece of this and is going to continue to be a focus in the months and maybe even years ahead.
Great. All right. I think we wrapped this topic a little bit early. Let's move on to the next. I want to examine one of the key talking points of sort of the blockchain debate has been, scarcely a blockchain policy discussion goes by without some mention of financial inclusion. And I want us to take a look. Is that real? So each of you, please respond to the following statement. Blockchain is expanding financial inclusion in your country. True, false, or too early to tell? And Yinka, let's start with you on this one.
Well, right now, too early to tell, but it had better, because that's the expectation. Otherwise, we're not sure what the magic bullet's going to be. Thank you.
Erik, I know there's been a lot of talk about how El Salvador's move to Bitcoin and Chivo had the potential to drastically reduce the cost of inbound remittances. Can you talk a little bit about that, and is it bearing out?
Yeah, so the answer to your question is yes. If the president's statement is accurate, the president of El Salvador, and there are more people using Bitcoin wallets than own bank accounts, it proves the point that there is financial inclusion. Let's take a real world example, right? let's use your remittance example and using the Strike wallet. So Strike is a wallet that can be used that leverages the Bitcoin Lightning protocol. But the way it works is very straightforward. Person A lives in Los Angeles, person B lives in San Salvador. On either side, they're connected to bank accounts, or not, perhaps. And in the middle, $100, $500 goes from LA to El Salvador. Underlying that, what people don't see is that there are Lightning nodes on either side, and money moves relatively quickly, well, very quickly compared to the SWIFT network and MoneyGram and so forth, with very few transaction costs and in a very efficient way. So right now, MoneyGram, Western Union, and the money transmitters using the SWIFT system charge exorbitant prices. And so if you look at a country like El Salvador, where 25% of the GDP is remittance-based, and then you say, what is 10% of that, which is what MoneyGram charges, and then what's El Salvador's GDP, you can look at the fact that there are hundreds of thousands of dollars that are going just to commissions to the money transmitter companies. And that could otherwise be used to help people. So things like the Strike wallet, the Chivo wallet, and others, and Stellar for that matter, are very good at getting money from point A to point B and promoting financial inclusion. Over.
Yinka, has there been a similar experience in Nigeria?
In terms of international remittances, we do still have the conventional actors, but we have new parties like World Remit and the likes trying to bring down the pricing, but we haven't seen that ramp up using blockchain technologies at the moment. So we're still hopeful and knowing that remittances play a big role in our market as well. And that's one of the use cases that we want for financial inclusion, international remittances, as well as bringing down the cost of financial transactions, which are still inhibitive to the lion's share of the 40 million that are still excluded. Thank you.
Alex, I'm curious about this in Ukraine. I imagine that it's probably a bit of a different story. If you look at people in Kyiv versus sort of people in the countryside. Is the ministry thinking about ways to use blockchain to sort of reach everyone, all the citizens of Ukraine?
Well, I would say that in the rural areas, it's not the time. It's they still adapting to a kind of cashless, and in the regular form of of banking cards and stuff, and people just get to use it. I would say that for Ukraine is probably false or too early to tell. Okay. That's from one side. And you mentioned like Kyiv and some other big cities. There's so many like financial institution and fintech startups, and we have pretty much advanced. I used to live in the States, and you can compare Ukraine. So from that standpoint, like financial services are much more better. But the main obstacle is that like people consume those technology, how they're familiar with them. So this is why I'm telling you this. This is too early to tell because there are a huge part of the population that's not trading yet.
Sounds like some more work to be done there. All right, so we've almost made it. One topic left, and all right, so here we go. One of the fundamental promises of crypto is restoring power and agency back to the individual. And we've seen people take back that power in very grassroots ways, not just over their finances, but over the future of crypto itself. Some examples are Twitter advocacy in the US, some protests in Nigeria after the central bank circular, widespread crypto adoption in Ukraine, and of course the uptake of Chivo and Bitcoin in El Salvador. So what is your view on crypto's sort of power to the people impact on the politics in your jurisdictions? So Kristin, you were recently quoted as saying that Twitter was crypto's superpower in the United States. What did you mean by that?
Yeah, well, listen, advocacy in the U.S. has obviously been around for a long time, and there has been a lot of tools to get people excited and motivated enough to either write a letter or to send a phone call to their congressman. But I think, during the pandemic, a lot of that changed. And Twitter is a place where a lot of people in the United States, particularly, come to debate crypto. If you're into crypto, you're on crypto Twitter, and there's also Reddit channels and Discord, et cetera. But the Twitter has been a place where a lot of conversation takes place, and I don't think other sectors or industries have that same type of intense community. And so when we had this bad legislation moving through Congress over the summer, we were able to activate the grassroots by virtually no cost, right? By getting news out and calling on individuals across the country to call their senators. And there was 41,000 calls made in the course of 5 days on that issue. And it was just a super powerful thing. Whereas, in the traditional world, you would have had to spend a lot of money targeting folks and getting people over time up to speed. Twitter, because they're so informed, was able to move very quickly, and so the community responded incredibly well.
Erik, I remember, shortly after the Bitcoin rollout in El Salvador, I remember seeing some headlines here about people toppling and Chivo Bitcoin ATMs and setting them on fire and stuff. Has it been as popular there as the president is, and how has it affected the politics in El Salvador?
I don't think it's affected the politics of El Salvador very much. But what I would like, so it's really not an issue. It's not toppling the government. And I think the headline, if a couple of Bitcoin Chivo ATM kiosks have been toppled, I wouldn't spend too much time thinking about that. I would like to answer the power to the people issue and how crypto can provide that. So let me present two hypotheticals. There are some governments that choose to overprint fiat, and we've seen this time and time again, going back to the Roman Empire, which we can get to. But let's take the case of Argentina. Argentina is, I think, Exhibit A for overprinting and creating problems. And what the Argentine government does is it prohibits you from buying or selling other than the official exchange rate. So there's the official exchange rate, and then there's the black market exchange rate. And crypto has provided a means by which Argentines can not get their money stolen. That's a very strong word, but when the government overinflates their currency, it's basically stealing, right? And so crypto provides a way for you to maintain your savings in a secure environment. Now let's look at another example, which is digital surveillance. Central bank digital currencies are a thing, and they're only going to get stronger. Yinka mentioned the digital e-Naira, but the biggest mover in this space, and we're going to see this in the next, several months by the time of the Beijing Olympics, is China. And China's central bank digital currency is, in my opinion, a surveillance tool disguised as a payments mechanism. And so the People's Bank of China is going to be able to see everyone's transaction. And so when you say power to the people, right, do I want the government of anyone, right? And let's assume China exports that technology around the world, right? And if I lived in a certain country using the Chinese surveillance digital currency, do I want the government knowing that I bought a glass of wine? Well, maybe I've had too much wine, and maybe I can get, shut down for that. And so power to the people it takes many forms, and hopefully central bank digital currencies don't become tools of a surveillance state or authoritarian regimes to monitor their people. So you need to have that element of, if a CBDC is well done, you have an element of freedom and anonymity. But crypto already provides that. So crypto provides a means by which people can be safe from inflation, and it provides a means by which people can conduct transactions with some degree of privacy. keeping in mind, obviously, the
Erik, I gotta jump in there. Sorry. I think there's going to be a lot more on the CBDC topic in our next panel coming up. In the few seconds we have left, Yinka, how's this played out in Nigeria?
Well, I think I would look at it more from an activism perspective, because in 2020, when we had the riots, the youth riots protesting security violence, and the government saw that they were being fueled by crowdsourcing funds from different volunteers. So what the government did was try to shut that down, but they now moved on to a Bitcoin platform. So all these things are really fueling the people's power to be able to agree and activate themselves in different ways. So as a political tool, but I agree with what Erik has said as well in terms of the transactions on the CBDCs. So it's still wait and see, consumer protection, privacy, those also need to be raised as a front and center. Thank you.
All right, well, that will do it for us. Thank you all so much. What a fantastic discussion. I hope all of you in the audience had as much fun with this as I did. I want to thank each of our panelists for sharing their time and insights today. And that'll do it for us here.